Hi, I'm Jim Juback, and welcome to my Juback Asset Management video for what is today, January 18th. I'm in Venice, but in new digs. We moved houses, so this is my new office, kind of bare bones behind me. I've got windows, however, so very, very cool. And I can hear the seagulls from the lagoon in the morning as they try to figure out where's their fish this morning. Okay, so if you would like more of these videos, please sign up for my YouTube channel. I think we're now back in the rotation, so we should be doing 3 a week. So you can subscribe to my YouTube channel. If you want more of my stuff for free, that's and YouTube is free. You can go to my jubackpicks.com site. That's got 3 portfolios. Or if you want to subscribe, send me a little money to keep this all going. You can subscribe at jubackam.com. And you'll find links to all those down below. Right now, the market seems to be hung up on earnings and the Fed, when the Fed is going to cut rates, how many times the Fed is going to cut rates. But I think that there are other things out there, what are known as exogenous factors that we ought to be paying some attention to. It's not exactly clear to what we can do about them, but we ought to at least be aware of them and be thinking about solutions. And the 2 obvious ones are the Middle East, what's going to happen there, and Taiwan. Now, the problem with the Middle East is that at the moment, all the trend lines are pointing toward a wider conflict. Yesterday, on the 17th, I believe, Iran launched missiles to attack what they called a terrorist camp in Pakistan, over the border. Throw your missiles into Pakistan. And Pakistan was not amused and has retaliated by attacking terrorist camps in Iran. So you've got a back and forth. The 2 countries are saying, hey, we're not really going to extend this war. But, you know, Pakistan is a very scary power. It does have nuclear weapons. Iran doesn't yet, but it's been working on them. Iran does have a huge, huge arsenal of long-range missiles. The question so you've got Iran, Pakistan, you've got the Houthis throwing missiles at ships in the Red Sea. You've got Hazebullah with Iranian missiles sitting up north of Israel. So the question is whether this is going to all blow up. The most immediate effect is on oil prices, where every time we get a little rattle, the oil prices go up. The fact that the U.S. has become the kind of buffer producer in the market because of so much production coming out of the Permian Basin and other areas tends to damp this a little bit. But I think you're seeing, as the worries mount, you're seeing energy prices creep up. Not good for inflation. I think the Fed is watching this. But certainly if you're looking for, I think it may be hard to hedge this using something like the U.S. Oil Fund, USO. But it's something to keep in mind as we get maybe a little tenser in this region. Okay, that's one thing. Second one is Taiwan. Long-term simmering issues there. The Chinese saying, hey, it's part of China, we want to reunify. The Taiwanese saying, well, you know, we're not so sure we want to do that. And the US saying, well, it's part of China, but we don't want to see a forcible reunification. So we're going to recognize both parties and try to work with both parties, but we're going to defend Taiwan. There's a big election in Taiwan for a new president. And the candidate that was least in favor with Beijing won. He has since really toned down his rhetoric, clearly is trying to find a way to work with the People's Republic, so not to make tensions go up. There's been a slight increase in actions by the Chinese Army and Air Force and Navy around Taiwan, but not as big as we might have expected. So clearly tensions have taken a step up, but at this moment, everybody is sort of taking a breather and going, let's see how this all plays out. That everybody includes the US and Taiwan and the People's Republic of China. But it is certainly something to watch. Taiwan is a hugely important provider of technology for the world market, including the U.S. I mean, Taiwan Semiconductor Manufacturing has been trying as hard as it can to diversify its manufacturing. But hey, as the name says, it manufactures in Taiwan. The global chip industry really depends upon Taiwan. So worries here are, hey, could wind up in some kind of shooting war. But I think a step before that would be that it ratchets up tensions between the U.S. and China, and we're already in sort of a slow motion technology trade war. How far is that going to go? We're seeing the impact on chip companies, where a lot of sales go into China, and the Biden administration has basically said, well, you can continue to sell them, but you can't sell them the cutting edge equipment. So that's had an effect on NVIDIA and ASML, which sells chip making equipment. Something, again, to watch because this is important to all these areas. So again, I don't know of a really easy way to hedge this. If you've got stuff in your portfolio you're thinking about selling, maybe sell it a little earlier, reduce your exposure. I don't know that that it makes sense to sort of go across the board and do that right now, but it is something that I would watch very, very carefully and create a kind of intellectual bucket, if you will, that says, yeah, the Fed's important, yeah, earnings are important, but these exogenous things in the real world have an effect on the market too, and I need to pay attention to them. Okay, I'll try to track them for you here on my sites and in these videos. So we'll all keep on top of this stuff. Anyway, if you want